Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what people are sharing. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, I dive deeper into all of these topics, looking for potential investment opportunities, sharing those opportunities with everyone. I share my buy points with people. I do use technical analysis. I show people how to use technical analysis. I also use a lot of ratios and market conditions, looking at cycles. The real estate cycle is one of the big cycles that I like to focus on. If that seems interesting to you and you want to learn about that stuff, we have a special coupon code. Special is the coupon code. It's 50% off the first month only. And I have a larger discount with that same coupon code if you want to sign up for the yearly membership, either directly or coming from the monthly membership. So here is myself, the oil to copper ratio. I put another ratio below this. I posted this one first. We can go through this one first. This is copper to gold ratio. What this is it's pretty simple. It's copper divided by gold. And what we're seeing is a downtrend. We've got this kind of consolidation going on here, the three hump consolidation, the breakout of the downtrend. And then we've got a big back test coming on back. If copper starts to vastly outperform gold, it might tell us a different market condition. If you look at last commodity bull market, this really started to outperform. It bottomed in 2002-03, and it outperformed in 03-04 onward, all the way up to 2007. Oil does follow and does trade similar to copper. So when copper outperforms gold, it tells you you're in an economic expansion phase, so to speak. Conversely, when it goes down and heads lower, that is your problem area. So 2008 was a recession problem, is what I'll call it. We had another big contraction in 2020. It's this guy here coming down. We broke out. We've come all the way back. And if you focus in on the right-hand side here, we've got this three hump consolidation going on, a little bit of a false breakdown, and now we're working our way back up. Is it possible that we see copper start to outperform gold? And I think oil would go up with it. So I also did a oil to copper ratio. And to me, this looks like oil could outperform copper. We have a falling wedge, breakout, and now we're consolidating on top of that breakout. Crude oil is doing this wedge pattern on the right-hand side against all other commodities. It's doing it against gold. It's doing it against copper. It's doing it against silver, platinum, palladium. It's doing it against a whole bunch of different commodities. If we get an outperformance here or soon, I think crude oil could outperform the rest of everything. It's a possibility because of the setup and how it's squeezing into this corner against all of them like this. Yeah, I don't have the other ones here, but they're all very similar. Jordan Roy, he says a major breakout for copper from a 50,000 foot view. Copper set for all-time high breakout on a monthly and quarterly chart. This has extremely bullish implications over the next few years, and really what this is one big resistance area in here. It doesn't have to be perfect. This doesn't have to match right up against it. You can also draw this with a slight increase on it. And then you can see the lows are coming up into that resistance, which I would think this is going to break. Now, when this breaks, it's going to be a very big move. We had a very similar setup in the early 2000s. We had a wedge formation right here. And when that broke, that wedge formation, it went from under $1 all the way up to over $3.50 in one shot, in basically one shot. So if we're starting at 5 and it does a similar move, we could, I mean, it's possible to get somewhere like $15 or $20 a pound. I know, seems like a lot, but that's a possibility when you get these big breakouts of a 20-year consolidation. This is going to be a big move. Silver miners are breaking out versus silver. This is the real money making part of the cycle. That's when the miners start to outperform commodities. That also means that generally you're in a bull market when that's occurring. So if silver's going up and SIL is going up faster than the commodity, that's what this is showing us. And when it does that, maybe we get 2 times, 3 times leverage to the underlying commodity price through SIL ETF. There are other ETFs that I would prefer over this, or other individual companies. Another thing to look at, this is a double bottom. So it's a bottom here and another bottom. The momentum, you look at the bottom there, the momentum is starting to break out. So this is prime and ready to go. You can see volume confirmation here. We're sitting on top of that volume, and we've got an air pocket all the way up to the top here. So yeah, it looks really good. I'm going to skip this for right now. We'll come back to that. This is the 4 corners of equities. The S&P 500 industry group return macro correlations. The horizontal axis down here is your PMI manufacturing. Your vertical axis is your stocks relative to commodities. So commodities are down here. More of the stock stuff is up here. So when you get strong GDP with more inflation, these do very well. Basic materials, durables, banks, insurance, capital goods. If we get a weakening of GDP, but we still have strong inflation, so think of it as late cycle, transports, energy, and then you come back up through value, food, beverage, utilities, consumer services. And then you move back up into a recovery phase, which is low inflation or less inflation and weak GDP. This is the recovery phase. The recovery phase is telcos, commercial and professional services, pharma, food and staples. And then you get a stronger economy, but the inflation hasn't hit yet. So an advanced stage of a recovery phase, that's software, tech hardware, semiconductors, dividend financials, and whatnot. I think that we are going to get a mid-cycle wobble. I think that's kind of what we're in. Some people say that we're getting close to the end of an expansion phase. I just don't see how that's possible if you've got all these homes that we still have to build. That's where I get a little bit confused. It's like we need to build a lot of homes. We don't have the inventory, and we're not in a hyper supply phase, at least not yet. Could it get there? Yeah, it could get there. It's possible. But that's the 4 quadrants there. This is a great chart. He says, yes, rent goes down if your economy implodes, never recovers, and enters a deflationary spiral. Do you know what causes a deflationary spiral? Your demographics do. So this big move lower in 1991, coming back down, is your demographic shrinking when it interacts with the real estate market. So we can go over there and to the demographics in 1991, I grabbed this. You can see in 1991 that 40, 44-year-olds, there's a big bulge. It bulged out and then it dropped behind them. So they must have a later, the first-time homebuyers must be around like 35 to 40 years old. Because 40 to 44 was just leaving that home buying age, which is about this one. You can see there's a gap, 4.5% down to 3.5%, and then down to 3.2. There's a vacuum behind this increasing demographic. That's what caused, that's what partially caused the move lower. It's overvaluation is number one, and number two, it is a vacuum, or there's less people, less demand behind it. So they probably overbuilt in 1990, 91, and then there was a hole of people missing behind it. It's not as big of a growth that caused a large imbalance. So demographics drives a lot of things. It drives inflation. It drives potentially a higher real estate market, and then the bank loans that come with that real estate market. China just went through a big demographic drop too. I think they're going to struggle quite big because the demographics don't really expand back out like this did in 91 for Japan. Usually, like these guys here, the demographic kind of gets big, and then they have more kids again. And then, they had kids here at like 25, 35 years old. That's why 40 to 44, and then you look at 15 to 19, you do the math there, like 20 something years old. Coming down to back in December, Lennar co-CEO Stuart Miller, we're going to adjust to the market. We're going to maintain sales volume. So in order to do what they're doing, and this is Lennar's net new orders for the first quarter by year. Up, 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 and then the volume sticking up there. They're doing that by buying the rate down for affordability. So what they're doing is they are offering rate buydowns to sell homes to move volume. That's what they're doing. So they're taking affordability into their own hands. This is actually working quite well for new builds, because if there's low existing inventory, depending on where you're at, and you could go buy a new home and they're going to buy the rate down for you to help with the affordability, that's how they're enticing people to buy more new homes. That's how they're doing it. Out now, so this is Trump's deflation will be substantial and Jacksonian. Jacksonian. Layoffs imminent at Fannie and Freddie, and Trump will clean out Biden-era FHA forbearance programs and start housing foreclosures wave in quarter three. We'll see what happens. If we start to see this, we should be able to see it in some of the numbers, obviously in foreclosures. If they never come, because a lot of people talk pretty big about all this, if they don't come, well, then they don't come. And if it's not a lot of homes, then it's not going to impact the market as bad as what maybe this guy perhaps thinks. So we have to see it in the data first before it becomes a big impact. Jay Mackey says total oil production's at about 103 million barrels per day, of which roughly half is exported. Iranian and Venezuelan crude and products make up 2.7 to 3 million barrels per day. He's saying that's roughly about 5% or something like that. Of the entire export market. Someone please tell me how oil is a sell. I would really like to see that math, please, and thank you. So if they put sanctions on this and tariffs and do all this crap, you could impact 2.7 to 3 million barrels per day, or about 5% of the export market. And this is Donald Trump announced today that he will be putting what is known as a secondary tariff on the country of Venezuela for numerous reasons, including the fact that Venezuela has purposefully and deceitfully sent to the United States undercover tens of thousands of high-level and other criminals. So a whole bunch of background here on why he may do it, but that could potentially impact oil in the world. It says, since Trump is promoting his own meme coin, what is stopping him from also trading his tariff threats and tweets? Short S&P futures right before he announces he's going to tariff, go long right before he says no tariffs. And he says, seriously, like what's stopping him? The one thing that I was very disappointed with, I was disappointed that Trump created this meme coin and then did a pump and dump right when he was coming in. I didn't think that was very classy of him to do that. It had put a lot of doubts in my mind about how serious he is about being president if you're doing stuff like that. It seems to me, and it makes us look like we're living in a clown world. That's what it looked like to me when I was seeing this. I was like, I mean, that would be like someone who's on YouTube pumping and dumping companies, and you would say, well, that's just not ethically correct. That's kind of what I thought when I first saw it. But there's nothing stopping, and there's a lot of, I think, insiders in Congress that are doing just these types of things. You can look at their returns, and they're basically beating everyone. And I think they probably have insider information. Global M2 is exploding. Bitcoin will follow soon. You know, Bitcoin hasn't been in this market condition, I think, that's coming up. I'm very curious to see how it responds to the differing of market conditions, which will be a commodity bull market versus a tech bull market. So whenever we do make that transition from technology to commodity bull market, which I do think is coming, I'm curious to see how this responds, because we've got the M2 money supply going up. Is Bitcoin going to follow? And I'm sure a lot of people would say yes. I'm just going to say, let's see. I really want to see what the correlation is here. Here's Manish. He says the odds that the S&P delivers over 5% per year for the next 10 to 15 years is approximates to zero. There's zero chance. That deals with the valuation that we're at. Also is more evidence of a commodity bull market. He's all loaded up in commodities. That's where he's got a lot of some investments over there. Maybe not a lot, but a good amount in coal. In coal specifically. A powerful housing indicator for forecasting recessions, and this is a big one here. All employees, residential building construction, it's continuing to go up. That is a big driver, and this generally rolls over before each of these recessions. So we'll see if this rolls over. If it doesn't, I don't think we're going to go through a recession necessarily. If it does roll over and it starts to head lower, that is definitely when you want to start looking at the 2 and 10 yield curve. And then you want to look to see if it's dropping like a rock, where people are running to bonds for safety. If you get this going down and people are running to safety in the bond market, and you see that start to decline, uninvert, that's when you really want to start to worry. The golden age of natural gas is back. Demand growth in 2024 rebounded, driven by higher consumption in emerging countries and Asia. The IEA says this is reversal to years of subpar growth post-COVID. Power and industries were the main drivers as gas displaced oil and coal. And that's a pretty big move here from 2024 to 2019 and 2023. That's a pretty big increase across the world for the change in natural gas demand. It's +4 versus +2 or so. Great features, AM update. We've got Capesize and Panamax down 1% for dry bulk. We have VLCC and Suezmax down 3% for VLCC and flat for Suezmax for tankers. Rick Rule says, not much more needs to be said. All politicians are the same. It's the voter who never learns. No matter who you vote for, the debt keeps rising and the bombs keep dropping. I hate to say it, they're kind of right. All of these presidents have doubled the debt, I think, during their tenure, almost all of them. It's part of the system and the design of the system, if you guys want to know. You can't actually pay the debt off. The money doesn't exist. They can only keep it going. 2025 will be silver's year. One of the most significant breakouts in history is in the making. This is silver, 45-year cup and handle. The mother of all probable cup and handles. The bigger the base, the higher in space. We've got a projected move, measured target move of $248 an ounce. And we're breaking up. That looks fantastic. Eurozone manufacturing PMI 48.7, so it's contracting a little bit. Services PMI is up 50.4, so we're expanding a little bit less than estimated. And the composite PMI is also up, expanding but still a little bit less than estimated. Huge stimmy, life is good for China. China. PBOC to conduct 450 billion MLF operation on March 25th, 2025 with a 1-year term. I don't know what that means, but we've got stimmies. We've got silver here. So over 5% of the momentum, and silver has now shattered the 200-week momentum barrier, calculated from the 2011 peaks. At this juncture, it's undeniable that a major momentum framework has been breached, signaling that prices are poised to climb even more rapidly. What he's got here at the bottom here is a price versus 200 moving average ratio. And it's starting to potentially break out here at any second. So it's looking good, and we could see an acceleration of price coming up here. This is copper. Momentum is tightening on the weekly 200 momentum for copper, with possible breakout from the golden wedge pattern. Copper prices could soon accelerate sharply. I don't believe we're far off from a critical moment. Add to that copper is currently testing resistance as we speak around the 520 level. So what this is actually charting here is copper's up at the top, the price. This is price versus 200 MA ratio momentum. And the momentum could accelerate to the upside and break out, and we get a massive move in copper. I think that's going to happen with a lot of stuff in commodities. I've been tracking this literally for years. What a wedge. This is Apple versus GDX, which is the miners for gold. We do have a breakdown where GDX is going to outperform Apple. This is what we want to see. This is capital rotation event occurring for Apple versus GDX miners. Looking good. For the miners, at least. It says, what are you confirming here? Propaganda? So can confirm, U.S. Department of Energy says, Energy Secretary Chris Wright says Trump push to produce more oil is driving down prices. No, what? No, it's not. We can see that the rig count is down. We can see that oil prices are down, but it has nothing to do with actually producing more oil. So we're not producing more oil, and our rig count's down. We're not drill baby drilling. I am confused, and that's why HFI is like, what are you confirming? Propaganda? I mean, that's kind of what it is. But that's all I've got for today, guys. That's just where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website using that special coupon code. And we'll catch you later. This is Finding Value.